Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, May 27th, 2009. Well, as we get into today's video, folks, I want to talk a little bit about what we're seeing in the markets right now. We are seeing a little bit of a breakdown. We just hit support after a breakdown. Now, this trend line, I'm going to go over this first, then we'll talk a little bit about the overall technicals and the charts. But overall, what you have right now is a breakdown from this trend line. This is what I have for the chat room. These are the exact charts I'm using for the chat room right now. And what you can see is the market here, if you take this low from yesterday into the close, connect it to the secondary low today, and then to connect it right up to these lows, you can see right here is a key trend line, and notice we just broke below it. Now, what does that mean? Well, it doesn't mean a whole lot other than you have a minor breakdown and a break of a pattern. Notice the pattern was really a sideways to upward move in the markets all morning long, kind of choppy, very, very choppy, slightly higher in the market. And basically, you had a situation where all the indexes were pretty much flat to positive at the highs up here, and then ultimately we started to sell off. Now, notice how once you took out this line, you fell, and first support I had mentioned in the chat room and on the free blog, the Rant and Rave blog, when I posted this chart saying there was a possible breakdown, and now it has happened, is this 50 moving average. This 50 moving average is at 91.25, so you have good support here at the 50 moving average. Notice how it's the first hit of that 50 moving average, okay? So good support right here. If this were to break, you have a couple pivot lows, but ultimately you're going to look for this double bottom on the lows of today, and then after that, the double bottom from yesterday's pivot low down here. Those would be your next two support levels if we break this 50 moving average on the way down. Now, right now, this 50 moving average is a very solid support line, so you have to respect it, see if we get a bounce. But as you can see, the market's been a very, very choppy market all morning long. You had initially a little bit of a gap up, and then we sold down, then we bounced up, and we were really trading between what I like to call a triangle. It's not a true, I don't really like the whole triangle things here in the money stocks. We hate the whole idea of triangles. What type of triangle is it? Really, you just want to follow it because it's giving you trend lines, and that's the bottom line. You're really just looking for a break here, and what you can see here is the market continued to hit on the highs from yesterday, right here, this blue line, which is right around that 91.50 level, and you kept on kind of bouncing off that level all morning long. Going into the light volume lunch, and notice the volume drawing up here, you actually did break above it. What did that mean? You were going to go test our secondary level here at 91.75. Sure enough, you test it, and that's really where the top is put in for the day. At that point, you start to sell off beautifully, come all the way down, bounce around the 20 moving average, which is also this lower trend line, which is the key breakdown, and sure enough, you come down, break that level, come right to the first support line here, and you can see the little bounce happening. Now, as I said, if this does happen to break, and by the way, you're looking now for pattern, price, and time, pattern could be a bearish pattern developing. We'll have to watch it very closely. If you do start to break lower, though, you're going to head towards this level right around the lows of the day today. Okay? Having said that, I just want to reiterate what the markets are currently doing. The Dow is right now down about, 35 points. The NASDAQ is still positive on the day, up 7.5, and the S&P is down about 1 point. Now, the key here is this, guys. When I go into the charts, what I want to talk a little about is the news out today. What was the key levels today that we talked about yesterday? Obviously, this level here, this 91.50 was a key level, and obviously this 91.75 after was a key level. I'll show you the 60-minute chart as well, which really shows you perfectly how this 91.75 level worked out beautifully on that chart. But long story short, this morning you had a little bit of economic news. You had the existing home sales at 10 o'clock. You can see that happen right here. Initially on that, you got a nice spike up, and then you reversed all the way back down and kind of had a big sell candle here on heavy volume. Notice how this 10 o'clock volume mirrors yesterday's green volume on the consumer confidence. So you can see the symmetry here in the volume, and since then, really on either side, it's just been dead volume all day. The volume today is relatively light. We've done about 1.25 million contracts on the futures. That is a borderline light for here at 1 p.m. Eastern Time. Now you can see what's going on here, guys. Exactly what I called. We had a breakdown right here. It went to first support. You got a minor bounce. Now you're starting to form what I would look for it to be a bearish pattern unless they can float this market up on very light volume. The stocks that are leading today are Goldman Sachs. Look at Goldman Sachs here, folks. Goldman Sachs, notice the very, very positive move. Had a little bit of a pullback, but notice Goldman right at the 20 moving average. Good support on Goldman. What does that mean? It also translates to the spiders and the markets. When Goldman's at good support and bouncing, most likely it will cause a bounce in the markets or a minor bounce at the very least. Apple Computer, another one. Huge move on this again. Yesterday had a huge move on the upgrade. Today, again, look at this extension move. Went to right at 135 and then kind of consolidated sideways. Little downtick. Where did it downtick to? The 20 moving average. So you have two of the leading main stocks hitting the 20 moving averages for the first time on just very, very minor pullbacks while the SPY has pulled back. So again, you have to understand how that reflects on the market. When those levels are showing just minor, minor pullbacks to first support levels, you have to look for a bounce in the overall market, and that's generally what you are seeing here. And I'm going to go back to the spiders and look at this, guys. All right, that's all it is. All it is. You knowing price, pattern, time, and trendline analysis, and knowing your leading stocks, understanding the market. Not just understanding, fundamentals are nonsense to me. You got to understand the underlying impact of the market. When you see Goldman Sachs and Apple, the two leading stocks in this market, hitting good support lines like they just did, and the market just broke down, you have to anticipate a bounce. Now, the very, very solid bounce, and believe it or not, if this actually gets back above this trend line, you could actually negate the breakdown. If this recaptures the 20 moving average, you can see the 20 right here. If this is able to recapture, it would negate that bearish pattern. However, if you do come back down a little bit and close back below, you'd still have a bearish pattern possibly intact. But this is very important now to watch. See if this can close back above it. And again, watch this 91.50 level. Really, 91.50 is the level you're watching now, and you're seeing if it can recapture that 91.50 on this candle. As long as it pulls back and doesn't really close above that level, 91.50, then you're still in a bearish possibility of a pattern on this chart. Okay, so just again, it shows exactly what's happening. Apple bounce, Goldman bounce, all of them coinciding to give the market a bounce. Now, the interesting thing about today is we've talked about how the dollar has a big impact on this market recently, and sure enough, you're exactly seeing that. The dollar getting a little bit of a bid today, just up a little bit, was up much, much more, and when it was up much, much more, the oil front was down. Remember, look at this chart on oil. The dollar gaps up, oil moves down. All right, so again, here's the chart on the USO. Nice sell-off as the dollar rallies. All right, and I'll show you a little chart of the dollar here. All right, here's your chart of the dollar. So the dollar here really starts out just slightly positive and rallies. What happens to the oil market? Pulls back. All right, then you get a little wishy-washiness. You kind of see it right here. Then the dollar starts to fall. What happens to oil? It starts to move up. And you can see the direct relationship between the dollar right now and the oil front. All right, absolutely. All commodities are geared by the dollar. The markets are really being controlled by the dollar right now. And you can really understand why. Obviously, when they're traded in U.S. dollars, it's going to have a major impact. So that's a big thing to watch this afternoon, because when the oil goes, ExxonMobil can oftentimes get a bid. Now, Exxon's been very, very weak right now, but if oil continues to rally up, you want to see if Exxon can get a bid. Now, one thing I'm seeing on Exxon is a possibility of a triple quadruple bottom. Look at the low right here and just take that trend line right across. All right, look at that right now. So you're really sitting, this is a key level on Exxon. If this breaks, you're going to the low right here. There'll be another little minor support level right here on Exxon. And if that breaks, then you actually could be in for a nice little decline on Exxon, possibly all the way down to this level down here on ExxonMobil. Okay, so those are key levels to watch on Exxon. You're coming right into support right here at around 69.25, 69.30. Then after that, you'll have a little bit at 69.20. So 69.20 to 69.30, really very good support. If that breaks, you could be in for a free fall. But just remember, with oil rallying, oftentimes you can get a lift on Exxon at some point today. Goldman Sachs, let's go back to Goldman. Goldman actually reversing that little bit of a bounce, so that bodes well for our bearish pattern formation. And you can still see a very, very positive candle, but it is coming back in. See the wick up here was all the way this high. Now it's retraced back in here a little bit, and you still want to follow this pattern to see how it's going to develop, because remember, price, pattern, and time is everything. All right, I can tell you exactly where this market's going, with 90% accuracy based off of price, pattern, and time, just like I've been doing in the videos for the past God knows how long. And again, right here, the pullback to this level off of a breakdown, this told us we broke down. We went right to first support. That's expected to be a bounce. You look for then pattern, and sure enough, you get the bounce. Now you're looking for pattern over the next couple candles. It's exactly all you're trying to do here, guys. You're not trying to, be a brain surgeon or anything. It's not that complicated. All right, but again, if you join our research center, we teach you much, much more in depth, along with giving exemplary guidance on the markets in the research center, again, at inthemoneystocks.com. Chat room is always a fantastic thing as well. People love the chat room. Hands-on, live, one-on-one, really commodities, oil, dollar activity, market activity, constant calls, constant analysis all day long using live charts. And you see the charts on your screen. They pop up. All our charts, as we change them, are popping up on your screen and everything. So really fantastic. We do hope you come join us. But in any case here, folks, now the video, I'm going to end the video today, but what I want you to do is really follow these next couple candles. Do we get back above 91.50? Do we kind of consolidate sideways? Could that be setting up for another bearish drop? Follow Goldman Sachs, Apple, and Exxon, and oil, and the dollar. That's your royal flush to follow, if you will. All right, have a wonderful rest of the day. Thank you as always for watching. We hope to have you along with our premium services to get the best guidance ever shortly. Take care.